This is Zahura, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week 6 of 2026. As always, let's first check what we had previous week to see what's going on in the market, and then we can go forward and check the markets and economic data ahead, and then we can also check the charts and see what's the situation of financial market. Last week we had the market was affected by geopolitical tensions very much. As you know, and all of us now, there is a revolution going on in Iran, and the geopolitical tensions between United States and Islamic Republic based in Iran is so high at the moment. And that's affecting the market, gold price, oil price, and generally affecting the market tensions. Last week at the first, on the last Friday, we had the VIX above 22 for a few hours. That affected the oil price about to $66 for some reasons, for some hours. Generally, the market risk is so high on that side. On the other side, between Russia and Ukraine, the second round of the talks, negotiations in Abu Dhabi continued last Wednesday. So far, we had no reason, we cannot really touchable reasons. We didn't have so far there. However, the United States for now, it sounds like it's in official data and official news says that the US gave both sides time by end of February to reach the reasons, to reach to some point and some agreement. Otherwise, they're gonna affect both economies, and both countries will receive some new sanctions and tariffs and pressure from United States. Both sides is for both sides. It's not just for the Russian side, or it's not just the Ukrainian side. Sounds like US gave unofficially gave them the time by end of February. On the other hand, we know that the United States is planning to send some military equipment to Taiwan, and that's reacted. China reacted so rapidly and so sharply to that made that if you do that, things between us going to be changed. That was very we know that the last week we had a phone call between President Trump and Xi Jinping. They were talking about mostly about the tensions in the Middle East, but that was also one of the other topics in their phone call. Let's see what's going to happen there. And finally, we had an election in Japan, and this election in Japan sounds like so far Mr. Keiichi and his party is going to win this election, which is going to be which can be the positive for the Japanese stock market, as Mr. Keiichi and his party and her party, and generally the situation right now is mostly about the supporting policies, new stimulus, and that can be the positive. That can have the positive reaction in the stock market. However, it cannot be such a good idea for the Japanese yen. Let's see how the market will affect to that. On the economic side, we know that we have a short period of the particular shutdown in the government. That's why some part of the U.S. government didn't work last week, and that affected the markets as well. We didn't have the NFP numbers due to these holidays. That sounds like this Friday we're gonna have the NFP numbers with a delay. However, the market continued reacting to the stock markets with news, especially the earnings reports. On the other hand, the effect of Kevin Warsh nomination in the markets continued. We now the concerns over the intervention by the U.S. government in the central bank by nominates that before market was thinking about them, it was so high. The market had a very big concerns, and that affected the U.S. Dollar value. The market just had a negative reaction to that. U.S. dollar somehow lost its value, same as the U.S. bonds yield. So U.S. bonds. So the dollar index fell under 96 mark for even the 1 or 2 days, I think if I don't miss it, 1 day. However, with the nomination that we had, that Mr. Trump had, this concern is somehow is right now is out of the table, as Mr. Kevin Warsh showed in his previous history, that he is the man of the mostly hawkish policy, very independent, and he worked as a Fed governor between 2006 and 2011. Sounds like he's an independent person and looking mostly about the economic data. So that's made the give more confidence to the market and increase the value and the rate for the dollar index and U.S. governor bonds. That was generally what happened out of the economic calendar. Looking at the economic calendar, the data that we had so common last week, it was the PMI numbers. Monday we had manufacturing, and Wednesday we had service and composite data. Generally, the PMI numbers showed slightly progress in January for most of the economies. However, the market had focused on four central banks. The first one, it was the Reserve Bank of Australia, which increased as market expected the rates by 25 basis point as inflation is increasing. In the previous meeting, RBA policymakers, they mentioned that if the inflation is continued to increasing, we will raise the rates, and that's what happened. They kept their promise, and they hiked their rates by 25 basis point as expected. Then later on Thursday, we had two other central bank meeting. BOE, the first one, the Bank of England cut the rates. Didn't cut the rates as expected, because the market was talking about the possibility of 25 basis point rates cut as well. However, comparing with the overall market expectation, the decision was more dovish, as instead of two votes for rate cut for members, they voted for 25 basis point rate cut, and giving the signal that the next meeting they can cut the rates. The central bank in the Eurozone or ECB also hold the rates at 2% in line with the market expectation. They ignored the inflation that day before we had from Eurozone at 1.7%. The data shows that the Eurozone inflation mostly is down because of the lower demand in the market, as we can see in the retail sales and GDP data. However, European Central Bank also, with the lower inflation right now and the problems that the concerns, the problem that we have in the European economies, most probably we can expect 25 basis point rates cut in next 1 or 2 meetings. Later in Mexico also, we had central bank decision and monetary policy meeting, and as the other banks, they also held the rates at 7%, as the inflation is showing some concerns. However, the interest rates with the Mexican central bank, has been cutting the rates in several months, and now sounds like it's better to wait and see. This policy will be much better. In United States, we didn't have the NFP numbers, but we had the GLTs, and the GLTs fell sharply to less than 7 million to 6.5 million, and now we have less than one job available for every unemployed American. That's the concern right now in the market, while continuing and initial claims also increased from previous week. Yeah, that was the most important data that we have last week. Up in Canada's unemployment rate increased, fell to 6.5% from previous 6.8%, which was positive news, good news for the Canadian economy. However, in Russia, the unemployment rate increased to 2.2% from previous 2.1%, while retail sales increased by 3.9%. Very good number compared with the economy with the other European economies. Later, that was what happened the previous week. But for the week ahead, in the week ahead also, we're going to have a very important week, while the geopolitical tensions, especially between US and Islamic Republic based in Iran, continues, and the market should watch whether they're going to go there for the second round or not, and if they want, what will be the condition and what will be the situation between that. The talks And this process of the talks between the United States and Islamic Republic based in Iran, it will be very important for markets and market participants. That should be especially for traders and investors active in gold and oil markets. That's about the geopolitical tensions. But in the economic calendar, Monday and Tuesday, we have some data to watch, mostly about speeches. But how I should say the EI in the week ahead, we will have the EIA, IE, and OPEC monthly report, and all of them will be very important in line with the geopolitical tensions. These three monthly reports will be very important also for energy market traders and investors to watch. They're gonna give us just like broader idea of what's going on in the energy market, what's the supply, what's the demand, and things like that. You shouldn't forget to follow them. However, on Wednesday, the most important data will come with, first of all, inflation numbers in Japan. Inflation in China, sorry. In Chinese inflation last month increased by 0.2% monthly and 0.8% annually. This month for January, we are expecting to see again the inflation, consumer inflation, slightly above 0%, above the, slightly increasing with 0.1% probably, or again 0.2% monthly, but annually it can increase by 0.4, 0.5%, something around that. While the PPI, Producer Price Index, also supposed to increase and improve from minus 1.9% by dropping only 1.5% in January, which can be positive news for Chinese economy, as we're gonna have the Chinese New Year holiday in next 10 days. That can affect the markets as well, because the people they're gonna buy more, so inflation and the retail can be positive. So that's why we can see December, January, and February, 3 months, we will have the positive numbers, and that can increase the Chinese GDP generally. However, the market will mostly focus on a later data, which we will have from United States, the labor market data, NFP numbers. We are expecting to see again unemployment rate unchanged at 4.4% by around 70 or say 80,000 newly created job, while participant rate should be unchanged at 62.4%, and average earnings should increase with slightly lower rates at 6.3%. That's lower piece of the average earnings at 3.6% annually and around 3% monthly, 0.3% monthly. That can tell us that the market should the retail sales can be slightly affected, and inflation as well to lower the side in the next months. However, even if we see these numbers, you can say that while the labor market is weakening slightly, but it's at the same time 4.4% unemployment rate is still acceptable level. We shouldn't be too much worried about the labor market. Later on Thursday, we will have very important number from United Kingdom, which we can say that the Thursday will be the UK day, as we're gonna have the GDP numbers, manufacturing and industrial data, trade numbers, and all of them. They will tell us like what we are expecting to see from these numbers. Generally, slight positive numbers, and these slight positive numbers will tell us that the UK economy needs support, and they will support the idea of 25 basis point rates cut for the next meeting. That will be very important for BOE. These numbers on Thursday will be very important for British Central Bank or Bank of England. And finally, on Friday, interest rate decision from Russian Central Bank will be held, and we are expecting to see the interest rates unchanged at 16%. However, market will focus on inflation numbers from United States, where we are expecting to see both CPI and core CPI to increase by 0.3%. At the same, they will increase at the same level, and we will see most probably The annual rate also at the same level of 2.5% for both of them, but CPI is supposed to slightly ease from 2.7% and core CPI should ease from 2.6%, but both of them at 2.5%. This is what we're expecting to see, which means that the inflation is cooling down slightly. But if the inflation cools down much more than this, then we can give it chance, a slightly more chance for the rate cut in March. We know that for the March meeting right now, we have around 22% chance for rate cuts, and that can increase. That per week before it was around 10%. So let's see what's gonna happen, but I don't think that inflation going to fall in United States that fastly and sharply. Looking at the chart, what we can understand from the chart, especially if we want to start with the VIX number and to see the market risk, we can see that the VIX around 19, which 19 is so high. Even thought it is slightly lower than above 20, around 20 that we had previous week or at the beginning of the week, but still, at the beginning of the beginning hours of Friday, where we saw that the market was expecting for negotiations between the U.S. and Islamic Republic based in Iran. Both of them they met at the 10 a.m. in in Oman. That increased the market tensions. However, the news right after that they decided to meet again, slightly ease the market tensions. However, we don't have any clear idea of when when and how and where they're gonna meet for the next round of the talks, and even if they will be happen or not, that's why the market risk is still down. United States usually do is military attack at the holidays. This week will be very good time for the U.S. Military to start its attack as the Saturday, Sunday, and Monday. 3 days holiday they will have. So for the financial market, will be very good time to see just like this higher tension and the lower while it's closed and not get affected sharply at the very first hours. That's with what happened last week. We saw the US dollar index increased from below 96 to above 97 and ended the week around 97. From the middle of the week, we saw the dollar index at above 97 and still it's around there 97.70. And if we don't have the big surprise up or down, but usually the overall expectations to see the dollar index between 97 and 98. Same for the gold. For now, we are expecting the general movement between 4,008 and 900 and under $5,000 to move for the gold. But if we have the higher risk in the market and something happened between the Israel, United States and Islamic Republic based in Iran, we will have the higher tension in the market that can increase the demand for the gold safe haven. However, if that happens, if not, we will see the prices around these numbers. We don't have any other reason right now to put the pressure or encourage the prices. And same for the oil. If we don't see any military action, we can expect the oil price to slightly ease under $60. Otherwise, however, since the market tension is still high, especially in the Middle East, we can see the prices higher. Don't forget, $63.46 or $60.50, $63.50. While the overall market expectation economically should be around $55 and $56, is very high level. Is very high, and so it's all dependent on the geopolitical changes. Same in the stock market. The market sounds like still strong, even thought compared with the 2-3 weeks ago is still slightly lower, but the earnings that we had, they were good in the EPS and revenue, but if we look at their guidance and their outlook for the year ahead was not such a good, they were not such a good numbers and expectations of brilliance. That's why we had stock prices lower, and that put the pressure on there. Anyhow, with the condition that we have right now in the market, the situation that's going on there, we can say for now that the stock market can be under pressure. So Even thought, yeah, on Friday they had some recovery after like the better EIE based data, but still and lower concerns and lower tension in the just like market risk. They increased slightly and closed generally at almost at the same level that they opened the week, but still the market in the bigger picture is still under pressure. Same condition and the situation we have for the Bitcoin, even thought on Friday due to lower risk and removing the risk in the market. The Bitcoin also recovered from around $60,000 to $70,000, but still the market is under pressure. In the bigger in the bigger picture, still we are in the Bitcoin and the cryptocurrency markets moving lower. This is what happened and what we're expecting to see in a week ahead. And if you had any other question, don't forget to write in the comment section. I will get back to you as soon as I can. Have a good time. Bye.